Hey there, future crypto millionaires. Ever dreamed of watching your money grow while you sleep? That's the exciting world of crypto trading. Imagine a decentralized financial system, free from the shackles of traditional banks. That's the power of cryptocurrencies like Bitcoin and Ethereum. Crypto trading is buying and selling these digital assets, aiming to profit from their price movements. The best part? You don't need a Wall Street suit or $1 million to get started. With the right strategies, even small investments can yield impressive returns. This isn't about get-rich-quick schemes. It's about taking control of your financial future. It's about understanding the transformative potential of blockchain technology. Are you ready to ride the crypto wave? Let's dive in. Before you jump into the exhilarating world of crypto trading, let's equip you with the essential tools. First, you'll need a cryptocurrency exchange. Think of it as your digital marketplace for buying and selling crypto. Next, choose a digital wallet to securely store your precious crypto assets. There are various types of wallets, each with its own security features. Remember, security is paramount in the crypto world. Now let's talk about market orders and limit orders. Market orders execute your trade instantly at the current market price. Limit orders, on the other hand, allow you to set your desired buying or selling price. Finally, familiarize yourself with technical analysis. This involves studying price charts and indicators to identify potential trading opportunities. Armed with this knowledge, you're ready to conquer the crypto market. Let's kick off our strategy session with the simplest yet surprisingly effective approach: HODLing. HODLing, a term that originated from a misspelled word in a Bitcoin forum, has now become a popular strategy among crypto enthusiasts. It stands for "hold on for dear life," and it emphasizes the importance of patience and long-term thinking in the volatile world of cryptocurrencies. This strategy is perfect for beginners who are still getting their feet wet in the crypto sea. For those new to the world of digital currencies, the constant price swings can be intimidating. HODLing offers a straightforward approach that doesn't require extensive knowledge or experience. It's about buying and holding without getting swayed by the daily ups and downs. HODLing simply means buying a cryptocurrency and holding it for the long term, regardless of short-term price fluctuations. This approach is akin to investing in a promising startup or a piece of real estate. You believe in its potential and are willing to wait for it to mature and deliver returns over time. It's like planting a seed and patiently waiting for it to grow into a mighty tree. Just as a tree takes time to grow and bear fruit, your crypto investments need time to reach their full potential. The key is to remain patient and not get discouraged by temporary setbacks. The beauty of HODLing lies in its simplicity. You don't need to constantly monitor the market or make frequent trades. Instead, you can focus on other aspects of your life while your investments quietly grow in the background. You don't need to be a chart wizard or a technical analysis guru. Many people get overwhelmed by the complex charts and technical indicators used in day trading. HODLing frees you from this stress, allowing you to invest with confidence and peace of mind. Just choose a cryptocurrency you believe in, invest what you can afford, and let time work its magic. It's important to do your research and select a cryptocurrency with strong fundamentals and a promising future. Once you've made your choice, invest an amount that you're comfortable with and can afford to lose, as the market can be unpredictable. Remember, the crypto market is known for its volatility. Prices can swing wildly in the short term, and it's not uncommon to see significant fluctuations within a single day. This volatility can be nerve-wracking, but it's also what creates opportunities for long-term gains. Prices can swing wildly in the short term. However, history has shown that despite these fluctuations, many cryptocurrencies have experienced substantial growth over the long term. By holding on to your investments, you give them the chance to recover from dips and benefit from future upswings. But as the saying goes, time in the market beats timing the market. This adage highlights the importance of staying invested rather than trying to predict market movements. Attempting to time the market can lead to missed opportunities and increased stress. By staying invested, you allow your assets to grow and compound over time. So relax, hodl tight, and let your crypto investments flourish. Embrace the simplicity and power of HODLing, and trust in the potential of your chosen cryptocurrencies. With patience and a long-term perspective, you can navigate the volatile crypto market and achieve your investment goals. Section 4. Dollar-Cost Averaging, your steady path to growth. Now let's explore another beginner-friendly strategy, dollar-cost averaging, or DCA for short. Imagine climbing a mountain. The journey to the top is challenging and the path is often unpredictable. You wouldn't want to rush and risk a dangerous fall. Instead, you take it one step at a time, ensuring each step is steady and secure. Instead of attempting a risky, all-in summit push, DCA is like taking small, steady steps towards the top. Each step represents a small, consistent investment, reducing the risk of a sudden market drop affecting your entire portfolio. With DCA, you invest a fixed amount of money at regular intervals, regardless of the market price. This methodical approach ensures that you are not swayed by the market's highs and lows, but rather, you stay committed to your investment plan. This approach helps you average out the cost of your investment over time, reducing the impact of market volatility. Market prices can be unpredictable, and trying to time the market can be stressful and often unproductive. DCA helps mitigate this by spreading out your investments. Let's say you want to invest $100 in Bitcoin. The price of Bitcoin can fluctuate wildly from day to day, making it difficult to decide the best time to buy. Instead of buying all at once, you could invest $20 every week for 5 weeks. This way, you are not putting all your money at risk at one point in time. This way, you're buying more Bitcoin when the price is low and less when the price is high, ultimately smoothing out your average cost. Over time, this can lead to a more balanced and potentially more profitable investment. DCA is a disciplined approach that takes the emotion out of trading. Emotional decisions can often lead to buying high and selling low, which is the opposite of what you want to achieve. It's like setting your crypto investments on autopilot, allowing you to ride out market fluctuations with confidence. By automating your investments, you can focus on other aspects of your financial strategy, knowing that your crypto investments are being handled systematically. Over the long term, DCA can be a powerful tool in your investment arsenal. It encourages a long-term perspective, which is crucial for success in the volatile world of cryptocurrency. By consistently investing, you are building a habit that can lead to significant growth over time. Remember, the key to successful investing is not just about making the right choices, but also about maintaining a steady and disciplined approach. Dollar-cost averaging helps you do just that, providing a steady path to growth in your cryptocurrency investments. So, as you continue your journey in the world of cryptocurrency, consider incorporating dollar-cost averaging into your strategy. It's a simple yet effective way to manage risk and build your portfolio over time. Happy investing! Section 5. Trading bots, your automated crypto assistants. Ever wished you had an assistant working tirelessly 24/7 to seize crypto trading opportunities? Imagine having a dedicated helper who never sleeps, constantly monitoring the market for you, and making trades at the perfect moments. This is not a distant dream but a reality with the advent of trading bots. Well, with trading bots, you can. These sophisticated tools are designed to automate your trading strategies, allowing you to take advantage of market opportunities without being glued to your screen all day. These automated programs execute trades on your behalf based on predefined rules and parameters. You set the guidelines, and the bot does the rest, ensuring that your trading plan is followed to the letter, even when you're not around. Think of them as your personal crypto trading robots, tirelessly scanning the market, analyzing data, and executing trades at lightning speed. They can process vast amounts of information in seconds, something that would take a human trader hours or even days to accomplish. They can help you take advantage of even the smallest price movements, maximizing your profit potential. By reacting to market changes instantly, trading bots can capitalize on opportunities that might be missed by human traders due to delays or emotional biases. There are various types of trading bots available, each with its own strengths and strategies. Some are designed for beginners, offering user-friendly interfaces and simple setup processes, while others are more advanced, providing a wide range of customization options for experienced traders. Some bots specialize in arbitrage, exploiting price differences between exchanges. This strategy involves buying a cryptocurrency at a lower price on one exchange and selling it at a higher price on another, profiting from the price discrepancy. Others focus on market making, providing liquidity and profiting from the spread. Market-making bots place both buy and sell orders to capture the difference between the bid and ask prices, helping to stabilize the market while generating profits. While trading bots can be powerful tools, it's crucial to choose reputable providers and thoroughly understand the risks involved. Not all bots are created equal, and some may not perform as advertised. It's essential to do your research, read reviews, and possibly test the bot with a small amount of capital before committing significant funds. Remember, even the most sophisticated bot can't predict the market with 100% accuracy. The crypto market is highly volatile and unpredictable, and there are always risks involved. It's important to stay informed, continuously monitor your bot's performance, and be prepared to make adjustments as needed. Trading bots can be a valuable addition to your trading toolkit, but they should be used with caution and a clear understanding of their limitations.